Hello, and thank you for taking the time to review our wealth building products. My name is Ron Monterulli. I am the president and co founder of Market Masters International. I want to start off by saying that we are very proud of our record in teaching and showing people from all parts of the world how to always get the very best profits out of their investing. We literally show people how to maximize profits in their retirement plan and investment accounts, regardless if the markets are going up or down, and at the same time, show people how to minimize costs and losses, putting significantly more money in their pockets where it belongs. You got to be doing something right when customers call and tell you that they are having a hard time believing how much money they're making in their investments versus what they used to make and lose. I have a feeling that you'd like to be one of these glowing customers as well, and are probably curious to know how we go about doing this. So please allow me to introduce you to Mr. Livio Nespoli, a true visionary who in August of 1985 became a licensed stockbroker and went on to become a Series 7 registered investment advisor, culminating in establishing Inner Analyst, a forward-thinking financial publishing company. Livio has written hundreds of publications and delivered countless seminars to thousands of professional and amateur investors worldwide, teaching them how to accurately identify market crashes and market booms well ahead of the mainstream. Now, the logical question you most probably have is, how does he do it? So let's listen in to Inner Analyst's founder and CEO, Mr. Livio Nespoli, to explain exactly how he has done this for over 20 years now.
Hello, my name is Livio. If you own a discount brokerage account, have a 401k plan, superannuation, or other retirement plan anywhere in the world, then this information is for you, and it can cut your time to retirement substantially. If you own mutual funds, stocks, gold, silver, currency, or real estate, then you are in the right place at the right time. Whether you are a complete novice investor, have little money, or have experience, or are an investment professional, this short video is going to teach you how to change your financial destiny for the better. Do you know there is a proven way to make money while the markets are going up? Yes. And there's a way to make it 50%, 100%, or 200% or faster, and do it without risky options or futures contracts. That's right. Would you like to know a proven way to avoid the majority of market declines or even make money while they decline? Nope. You don't need risky options or future contract for this either. That's right. Let's get right into it so that you could take a deep breath, relax, and not worry ever again what the markets are doing or are going to do. You'll have complete control and peace of mind knowing your family's well-being is protected from the insecurity and devastation of substantial stock market losses. So let's start right now. Let's go.
At Inner Analyst, our track record proves this. The stock market's direction does not matter. What you own during that direction does matter. Lower your fund fees, build profits while markets rise, preserve those profits while markets decline, and retire up to 21 years sooner. The S&P 500 index is the benchmark for the overall U.S. stock market. The index has outperformed 96% of all mutual funds in every rolling 10-year period since 1950. The S&P index is available in all corporate retirement plans and discount brokers. Let me tell you some inside information right now. This is the insider's investment tool of choice when markets rise. Just listen to Jason Zweig.
And one of the ultimate dirty secrets of the fund industry is that a lot of people who run other fund companies own index funds in their own accounts and don't talk about it unless you put a couple beers in them.
But do these insiders avoid stock market declines? And can you? The answer is yes, and I'm going to show you how it's done. Financial analysts use the S&P 500 in what is called correlation analysis. Correlation measures how investments move in relation to each other. -1 means investments move in opposite direction. As you can see there, one's going up and the other's going down. +1 means investments move in similar direction. As you can see, the two are going up and the two are going down. High positive or high negative correlation is the key to limiting risk and increasing return in both bull and bear markets. Okay, so let's learn about positive correlation. We use the S&P 500, as everybody does in the industry, to visually show you correlation. The bold black line in the 2008 chart below is the S&P 500 index. The other colors represent the Dow Jones Industrial Average, the Russell 2000, and the NASDAQ index. As you can see during the crash, all of them went down in lockstep with the S&P 500. This needs to bring up something to your mind real quick and ask yourself, well, if they all go down, what does diversification mean? You see, it's not just about diversification because as you can see here, diversification, they all went down. So it's not just about diversification. It is about correlation, and we're getting there slowly as we go forward. Okay, now that we're done looking at a bear market, let's look at the bull market that you see in the chart here. That's since 2009. What does this positive correlation imply? It implies that large cap, mid cap, small cap, international, and technology indexes all move in lockstep with the S&P 500 direction and have a correlation of close to +1. Okay? You can see the little box there with the symbols in it. The first one is SPY. The second one is the Dow Jones Industrial Average, DIA. The third one is the Russell 2000, the IWM. And the QQQ represents the NASDAQ. If you take a look at those, they are all above 90%. What does this imply? It implies, as the two charts illustrate, that the markets go the same direction, or these indexes go the same direction as the S&P 500. Okay? So if there's going to be a bull market, they'll follow. If there's going to be a bear market, they're going to follow the S&P 500. Okay? That's what this implies. Now let's take a look at negative correlation. The chart below implies that SH has a correlation of close to -1, because as the S&P 500 moves, SH will move in lockstep in the opposite direction. This is better known as an inverse fund, because as you can see in the chart, it grows when the S&P 500 crashes. You now understand that there is positive correlation and negative correlation. What we're going to do is teach you right now the wealth preserver and the arrows that provide the direction of the market. And then when we come back from that, we'll show you how to profit from both positive and negative correlation. Each colored bar represents a month. You must log in after 10 p.m. the last trading day of each week to see if there is an arrow. Arrows may appear weekly, allowing you better market entry points. However, arrows are only confirmed and locked in the last trading day of each month. When you see a green up arrow, like this one, buy and continue to buy within your brokerage or retirement plan account until you see a red arrow appear. When a red arrow does appear, it indicates to sell your investments and avoid much of a serious decline in your retirement account. When you do sell under the red arrow, your money will automatically settle into a money market account within your retirement plan or discount brokerage account. Nope, not every arrow is perfect, but wouldn't you rather be safe than sorry like most people in 2008? because the red arrow locks in the high growth you captured under the prior green arrow. Then all you do is wait for the next green arrow. That's all there is to it. Green arrows mean invest, red arrows mean preserve and protect. Now that you know how the Wealth Preserver works, I want you to know that this scrolling chart is real. The arrows are filed quarterly to certify, authenticate, and validate all green and red arrows. I'll be back shortly. Okay, now that you see how accurate and how great these arrows are, you can learn now how to make your money grow faster in bull markets. And it's done through correlation. If you look at the little chart there with the SPY, the RYNVX, and the RYTNX, it represents three securities that are based on the growth of the S&P 500. The SPY obviously is 1-to-1. The RYNVX is the RIDEX NOAA fund, and it grows 150% faster than the S&P 500. Then there's the RYTNX, okay? That fund grows at 2 times that growth of the S&P 500. If you know at a better than 90% clip that your correlation is going to take those assets up, why grow at 1-to-1 when you can grow at 1.5-to-1 or 2-to-1? Does that make sense? Now you see how correlation works. Well, let's take a look at the growth chart, okay? As you can see, since 2009, okay, in the the black, you can see that the market grew 128%. Now, if you use the RYNVX at 150% growth rate, you would have grown at 257%, okay? With the same exact movement of the S&P 500, all right? Now, let's take a look at the 200% growth rate, the RYTNX. Instead of getting 128 or 257% growth, you got 358% growth, all in the same time frame. So now you can see how you can put correlation in your pocket, in your retirement account, and get to retirement way faster. Now, let's talk about bear markets, okay, and the risk associated. Here's a question you can answer. Is it lower risk to lose money when the market declines with buy and hold, or to preserve your money by exiting and sitting on the sideline? You can see in the chart here, had you got out with our arrow, you'd have been sitting up here with 0% growth. If you'd have held on, you'd have ended up negative 40, 50%. That's in 2008. And look at the correlation. So you can see that diversification wouldn't have helped you. The only type of thing that would have helped you is getting out. I think just watching this will give you an indication of why avoiding losses is so important.
It was like, holy smokes, how do you stop the bleeding?
The reality of what you've lost is huge. Now half of your 401k is gone.
You know, if it took 13 years to accumulate $80,000 and 1 year to lose half of that, and then try to get that back in another 13 years and only be at the $80,000 that you were 13 years ago, the math doesn't work.
You saw their faces. They're absolutely devastated and have no answers. But there is an answer. When we show a red arrow, go to the sidelines and wait it out. We are going to have fun here on this slide. I want you to think very closely and stay focused on this because this is just stunning. Is it lower risk to lose money while the markets decline with buy and hold, or to make money because of very high negative correlation. You can make money while everyone else loses. Let me show you. This little box here shows you the SPY, which again is the S&P, as you know. And then it shows you SH. SH is an ETF that is the inverse ETF of the S&P 500. Now, I want you to understand, this is not a high risk options or puts. It's not leveraged or anything like that. It simply works like a regular mutual fund. The only difference is instead of making $1 while the market goes up, it makes $1 while the market goes down. Okay? So let's look at the chart. As you can see here, if you'd have had $100 at the beginning, at the end, you would have had 50 if you just bought and held. Or had you bought the short SH, okay, which is the ETF, you'd have ended up with $174. So while you have 174, your friends have 50. Amazing. So in other words, not only like in the previous slide where you can make money while the market's going up at either 100, 150, or 200% going up, you can also make money when it's going down. This gets you to retirement so much faster, it's stunning. The Wealth Preserver works in 401k, IRA, superannuations, and other retirement plans around the world. Here's how it works for those. Since you've learned that correlation analysis proves that better than 90% chance that the assets within your retirement plan are going to go up and down with the S&P 500, why in the world, when we get a red arrow, would you want to be in that and in those assets within your retirement plan and see them lose up to 50% or even more with the coming crash? Makes no sense. Okay? Just sit on the sideline, contact your plan administrator, and request that they just put it into a money market account or the safest government bond fund and sit on the sideline while that declines. Then get back in, as we showed you just a few minutes ago in those charts. Now, for those of you who do own discount brokerage accounts, or if you don't have one, I suggest setting one up, okay? The nice thing about the discount brokerage account is that within that account, you can get the SH fund. You can also get those 150 and 200% leveraged assets going up. So you can really put your retirement into hyperdrive. With retirement plans, you can avoid the declines and grow at a normal pace. With the discount brokerage accounts, you can grow at a much, much faster pace, okay? Because you can make money when the market goes up and you can make money when the market goes down. Those short funds are not available in retirement plans. So at least you don't lose 50% in the retirement plan. You can at least preserve that and grow at normal market rates on the way up. You're still miles ahead of those people who don't avoid bear markets. That is how the Wealth Preserver can help you. I promised you some fun. Now let's get to it. Our comparative analysis. Now that we understand correlation and how it works with our Wealth Preserver arrows, let's take a look at 4 different investor personalities. And you can determine which one you are from this example. John doesn't own the Wealth Preserver. He doesn't even know anything about it. He's just basically a Standard & Poor's index investor. And obviously with the SPY correlating 99.99%, his growth rate is also going to be just like the S&P. He's going to buy and hold and just go. Mary, on the other hand, is going to own the Wealth Preserver and subscribe. And when she does get a green arrow, she's going to invest in the SPY. So it's identical to John, okay, except that she does get out when she does get red arrows. Her correlation is identical when she's invested. It's 99.99%, okay, to the S&P. And her growth rate when she is invested matches the S&P. Noah, on the other hand, okay, he is also a Wealth Preserver, except he likes a little bit higher growth. He will buy RYNVX, okay? And RYNVX correlates 99.18%. It's almost identical to the SPY, except it grows at 150% or 50% more than the S&P when the S&P goes up. Now let's talk about the final investor, and that's Leah. Leah is also an owner of the Wealth Preserver, except she likes a little bit more growth than Noah. So even though she buys RYTNX, we know that RYTNX has 96.39% correlation. It's still going to grow exactly when the S&P 500 grows, except Leah will get 200%. Okay, so in other words, she will grow at 100% faster than the S&P 500. So let's now take a look at the charts. John is a traditional buy and hold investor who loves to pay someone else to manage his money, but has not learned about correlation and its benefits. So when he invested $100,000 on January of 2000, he would have done buy and hold, and his $100,000 would have grown to $179,000, as you see in the chart. Mary is more or less like John, except she understands correlation, owns the wealth preserver, and follows the red and green arrows. At the end of the same time frame, she ended up with 487% greater profit than John. Noah is more or less like Mary, except he understands correlation very well and appreciates a fund that grows 50% faster than its own index. His performance is substantially better than that of John's buy and hold. Leah is more or less like Noah, except she understands correlation extremely well and loves the fact that her money can grow 100% faster than the index it is correlated to. She understands correlation. Okay, let's continue with our comparative analysis. Look, all of them started with the same 100,000 on January 1, 2000. Only you can determine which person you want to emulate. But you must understand that Mary, Noah, and Leah follow the exact same arrows. And the growth rate has no effect on the correlation. So looking at the table below, you can see that the ending values are substantially different. John did the buy and hold, ended up from 100,000 to 179,000. Mary ended up with 458,000. Noah ended up with 637,000. And Leah ended up with almost $1 million at 825,000 with the exact same correlation. So, who do you want to be like? You now are already ahead of John because you know and understand what correlation is, how it works, and how it benefits you. Once you submit your low tax deductible subscription, you can determine precisely which investor you are and then have fun. Here are some final thoughts. You've heard the saying that knowledge is power. Well, so is correlation. Correlation is power. Aldous Huxley is one of my favorite brilliant minds of all time, and his quote is perfect for you to think about. Facts do not cease to exist just because they're ignored.
I think we can both agree that what you just learned can be extremely powerful and profitable if you act upon it. Due to our exclusive agreement with Inner Analyst, for the first time ever, you now have access to this information risk-free for the next 15 days, so that you can see just how powerfully simple it is for yourself. You see, our mission here at Market Masters International is very focused. Our objectives are to share a proven method of wealth accumulation and true prosperity to many millions of people around the world so that they can live life on their own terms, to follow their dreams and use their time, talents, and treasures to have a positive impact on this world. I'm certain that you would agree, knowing when to get in and when to get out of the market is priceless, and that it can help you achieve your financial goals and dreams much faster and with significantly less stress. The good news is you're not going to pay thousands of dollars for this information like many others have in the past. Because of our licensing agreement with Inner Analyst, you can have the Wealth Preserver buy and sell signals for a mere tax-deductible $49 a month. That is the price of half a cup of coffee a day. For added value, when you get started today, for the first 30 days of your new wealth building subscription, we will also include our Wealth Maximizer subscription, a search engine that helps you find the best investments to own in seconds. Or if you want to purchase both the Wealth Preserver and a Wealth Maximizer today, you will also receive our Smart Money System and Optimized Portfolio subscription for free. The Smart Money System is a product that follows what the large institutional insiders are doing on a weekly basis. The portfolios are a selection of 5 optimized portfolios that work together with the Wealth Preserver signals. We're so confident that you'll love our products as much as our glowing customers do. If at any time during the first 15 days you decide it's not for you, we will refund you 100% of your subscription cost. Simply click on the button below to order your wealth building subscription today. Still here? I can understand that you have some questions. That's why you've been invited to be our guest on our next Tuesday's live question and answer webcast with Livio Nespoli at 9 p.m. Eastern Standard Time. You can ask any questions you may have and get a response directly from Livio, the financial visionary himself. Simply check your email for the webcast details. In the meantime, let me share some of the results our wealth building subscribers have achieved. These are real people, various backgrounds, both novice and elite investors. People just like you, all achieving extraordinary results in just 5 minutes a week.
I started, like many of you, reading a book and joining a club, investment club, learning about stocks, investing in stocks, and I came to the realization pretty quickly that I'm the last one to know about anything that's going to happen in the stock market. So like a lot of you, I got involved with mutual funds, got an investment advisor, and went through the whole process, the ups and the downs and the hold and the this and the that. And I learned a few things along the way, and it's helped me, and so I'd like to share that with you. I guess what I learned that I didn't want to learn was that the investment advisor that I was using was paid not necessarily to act in my best interest in every case, not to get me out of the market when the market was declining, and they were limited by what they could advise me to do anyway. I wish I'd had product back during the 2000 decline in the market, because I felt like I should get out of the market, but I didn't have any reinforcement to that, and if I had, I would have been in a much better position. And so, like a lot of you, you may anticipate that another market cycle is coming, and I think that there is. And so I'm thankful that I have a product that will help me know when that market has turned. And that's, if all I got out of it was that, then I would be thankful, and I am. So the question that's probably in your mind is, this thing really work? Is this valid? And the only way you're going to find that out is you can take somebody's word for it, and I wouldn't suggest you do that, but is to try it and prove to yourself that it works. And the small amount of money that you pay to have this opportunity, to have this product, is a pittance compared to what you'll save in terms of the losses that you can take. So I would encourage you to give it a try.
Hello, my name is Lisa. As an attorney and subscriber to the Wealth Preserver, let me tell you my story. From late 2007 through the entire 2008 decline, I must have called my financial advisor 20 times in desperation. She told me to hang in there over and over again all the way down. I lost more than half of my money, and I bawled because that was years of hard-earned money. That did it. I quietly searched to see if there was a better way, and in late 2009, I was referred to Livio at InterAnalyst. Look, I trust it. It works for me. So why should I risk half or more of my money again when I don't have to? I didn't have to go to law school to figure this one out. Thanks, Livio.
I've been investing in the stock market for over 20 years, and I used to struggle trying to find what to invest in and when to invest in. I've seen lots of software packages in my years, but nothing holds a candle to with the markets being as volatile as they are these days. It's kept me on track, and it's told me what to invest in, when to invest in it, with absolutely amazing precision. I know, and I'm confident that my investment funds will continue to grow year after year. You have to check it out. I know you'll love it.
Livio, just wanted to thank you for the Wealth Preserver. It's been truly amazing in using your system. It's very simple to use, easy to learn. I cannot believe the difference in the last 8 months that I have used this product, the financial gains that we have gained on our investments compared to the last 5 years that we've had it under a managed account. Again, it was very easy to learn, and I appreciate all your research and effort that you put into this product. It is truly amazing. I feel like like a person with an insider's secret, and I can't wait to share it with my friends and family and to help them preserve their wealth also. Thanks for everything you do. Bye.
Hi, Livio. You asked me to provide a video testimonial of my experience covering the last few years, so here it is. I want to thank you for helping me protect the vast majority of my 401k plan from disappearing during the 2008 crash. And since 2009, it has made huge gains. I'm so far ahead of where I could have been. It's not perfect, but it's been worth 100 times the subscription cost to me. So, to whomever is watching this right now, I highly recommend you put it to work for you. Good luck.
Feel free to click on the Get Started Today button below. You have 15 days risk-free to see for yourself why so many people are loyal subscribers.